What's going on YouTube? It's your boy Juan back with another video. Here's how I made $600 trading the Nasdaq this morning on the short position using my continuation model. Went for a 101.5, 101.7, made myself available for this short position and got the fucking job done. As I said, boys, let's get right into the charts. Continuation models have been indeed fucking pain. All right. Here are the performance sets, 85% win rate, balance is looking okay, and cooking. So far, not bad for August. Okay. Continuation models simplified my trading. I think now they're not only optimal, high win rate, low risk reward is not only more optimal for prop firms, but continuation models, especially on such trendy markets like Nasdaq and futures in general, it's more favorable for you to trade them as opposed to reversals that can sometimes be predictions and a lot of fake outs happen with them. But I'll talk about that into another video. Right now, I just want to do a trade recap into this short position. I got 30 points to the downside towards the drawn liquidity being previous day's lows. And my entry was right around here off this 5 minute bearish fair value gap. First things first, let's go for a top down analysis, right? On the higher time frames, on the 1 hour, on the 5-4, all fucking high time frames, we're very, very bearish, relatively bearish, right? The trend is on a downtrend. On the 15-minute, bearish. On the 5, bearish. At a market open, we have this data highs right here at 8:30. London's highs. We have Asia lows around here, and we have previous day's lows. Okay. See, at market open, I noticed price had a 5 minute bearish fair value gap. For those of you who don't know what a fair value gap is, it's this wick and this wick, this gap in between. It was 5 minute right around here. Right at a market open, price displays up towards that PD array, and I said if we manage to inverse this 5 minute, we get a strong candle close above this PD array, I will be open to go for longs towards these data highs or possibly London's highs right around here. We also have a 1 hour bearish fair value gap right around here. If you guys see on my chart a lot of fair value gaps, they're simply high time frame PD arrays that I want to use as confluence in case price reaches them. That way I know what to expect, and I want to see a reaction from them, right? So we have London's highs, we have these data highs from here, and that 5 minute right around here. Okay. As I said, if we would have gotten an inversion from this bearish PD array, chances are we would have attacked these highs, but we were so bearish, price did not do that. Instead, we opened, tapped into this 5 minute, and immediately rejected from there. So on the 1 minute time frame, which is where I get all my entries, I noticed we came up here, manipulated up, obviously never closed above it, which is manipulated up, and immediately rejected this 5 minute and displaced down. All right. As soon as I saw displacement to the downside, I knew that okay, we're respecting higher time frame PD array, we're respecting this 1 minute bearish fair value gap. What's my next draw on liquidity? It's pretty much A plus. It's Asia lows, which got completely fucking ran through, and ultimately previous day's lows, right? August 18, yesterday's lows. So that was my draw on liquidity after I saw the reaction from this 5 minute fair value gap at market open. Took this trade right at market opening. I figured if we don't inverse this and reject from here, rejected very, very quick. This plays down very, very quick. I knew we would flush down the previous day's lows, especially at opening, right? It's very volatile. And I made myself available for it, right? Entered at this displacement down, right at this candle. And my stop loss was a 17-point stop, literally like yesterday. I put my stop above this 5 minute fair value gap, literally just above it, because if we just displaced down already very, very, very quickly, which we did, price has no reason to come back here. We already rejected it. 17-point stop was conservative and realistic in my approach for the day. Entered here with one contract targeting previous day's lows. And as you guys can see, previous day's lows got absolutely ran through. All right, the drawn liquidity was free using high time frame confluence, such as this 5 minute, in confluence with the lower time frames, and allow me to have conviction, discretion, and confidence towards the next drawn liquidity being previous day's lows. Again, guys, continuation model. Okay, high time frames are very bearish. We're bearish everywhere. I'm simply catching a continuation using higher time frame confluence, executing on the lower time frames. went for a 101 point something, and got the fucking job done. All right, boys. Very, very simple. Performance ads are looking good. I believe I'm like 1 day away from a payout. And yeah, simple, simple stuff. That is good games. And we got it done, boys. 30 points to the downside, one contract, 1-1. That's how I made $600 trading the NASDAQ today. Hope you guys enjoyed this video. If you do, like and subscribe, share it with a friend, and I'll catch you guys in the next one. Peace.